Even if you just casually glance at the financial news, Alphabet's latest earnings report really jumps out.
Mm.
The sheer strength of some of these numbers has interesting implications for anyone following the tech landscape, and, well, that's exactly what we're going to unpack today.
Right. Yeah, this deep dive is all about Alphabet's Q1 2025 earnings, the ones released on April 24th. We've kind of sifted through the earnings analysis, management commentary, some of the surrounding financial news to bring you the key insights.
Basically trying to cut through the jargon.
Exactly. Our goal is to cut through the noise and really understand what's driving Alphabet's performance and, maybe more importantly, why it should matter to you.
Absolutely. And we're structuring this into 5 chapters just to give you a clear roadmap without, drowning you in data.
Good plan.
We'll kick off with an executive snapshot for the big picture. Then we'll dig into how the results stacked up against expectations.
Okay.
After that, we'll explore the key drivers and what management was highlighting, followed by a look at the outlook and key metrics.
And then wrap it up.
Yep. Finally, we'll bring it all together with our bottom line takeaways.
Sounds good. And there are some pretty fascinating angles here. We saw a really significant jump in one of their profit metrics, for instance.
Right.
And the company is laying out some very ambitious spending plans for the future, especially around AI. So, yeah, let's dive in.
All right, let's kick things off with Chapter 1, Executive Snapshot. I mean, the headline here is pretty undeniable, isn't it? Alphabet had an exceptionally strong first quarter in 2025.
Yeah, no doubt. Revenue hit $90.2 billion. That actually beat what most analysts were looking for, which was somewhere around $89.2 billion.
And the earnings per share, the EPS, that really stood out too.
Oh, definitely. Diluted EPS came in at $2.81. Now, compare that to the consensus estimates, which were kind of hovering in the $2.01 to $2.04 range.
Wow, so quite a bit higher.
Yeah, I mean, do the math. That's roughly a 40% beat on EPS for a company this size. That's really notable. Suggests something significant is going on under the hood.
For sure. And what was fueling this? Well, it looks like Google search is still, a massive engine for them.
Still a core.
Right, especially with AI overviews getting more integrated.
Right.
And then Google Cloud showed, well, impressive growth and impressive profitability this time.
Yeah, that profitability piece is key. Plus, YouTube advertising and their subscriptions business, they also saw pretty healthy growth.
Management seemed really keen to talk about their, unique full-stack approach to AI.
That was the phrase. And they're clearly excited about their newer stuff, like the Gemini 2.5 model.
And financially, they look incredibly solid.
Oh, yeah. Generated $19 billion in free cash flow just in this quarter.
$19 billion.
Yeah. And they're sitting on, over $95 billion in cash reserves? Massive cushion.
And they're not just hoarding it either. They actually bumped up their dividend.
Yeah. Right? Increased the dividend by 5% to $2.21 per share. And they've greenlit a new $70 billion share buyback program.
So keeping shareholders happy while still planning for the future.
Which brings us to a really crucial point. That future investment. Alphabet is planning to spend around $75 billion. That's billion with a B in capital expenditures for 2025.
$75 billion.
Yeah. And the vast majority of that is earmarked for AI infrastructure. It's important to kind of flag, though, that this level of spending, it's likely going to mean faster depreciation down the line.
Right. Makes sense. Those assets get used up. Of course, it's not all smooth sailing. They did mention persistent regulatory risks remain a key consideration.
That's lurking for big tech.
Yeah. But overall, the picture seems to be strong execution, successfully leveraging AI, cloud scaling rapidly and profitably now.
That's the day one.
And they've got the confidence to invest huge sums for the future while also returning cash to shareholders. It's quite a mix.
All right, let's move into Chapter 2, Results versus Expectations. We touched on some of this, but let's get a bit more granular on how Alphabet's performance actually stacked up against the Wall Street predictions.
Okay, so revenue, $90.234 billion reported. As you said, about a 1.1% beat versus that $89.2 billion consensus. Solid, but not earth-shattering on the revenue side.
Right. And the growth rate for revenue, 12% year over year, or 14% if you look at it on a constant currency basis.
It just means taking out the impact of fluctuating exchange rates.
Exactly. So you see the underlying business growth. Now, it's a slight slowdown from the 15% they posted in Q1 last year, but still, pretty healthy growth.
Definitely. But the EPS story, that's where it got really interesting, as you mentioned.
Yeah, that $2.81 reported figure versus the $2.01 to $2.04 consensus range, that roughly 38 to 40% beat. beat is what really made headlines.
Huge beat.
And year over year, that's a substantial 49% increase in EPS, almost 50% growth.
Okay, so massive year-over-year jump. How does this compare to, say, the last quarter, Q4 of 2024?
Sequentially, it's a bit different. Revenue was actually down 6.5% compared to Q4.
And that's kind of expected, isn't it? Seasonality.
Exactly. Q4 is usually the biggest quarter for advertising, so a sequential dip isn't surprising. But here's the kicker. Despite revenue falling quarter over quarter, EPS actually jumped up significantly by 30.7% compared to Q4.
Okay, hold on. Revenue beat was small, maybe 1%. EPS beat was massive, like 40%. Revenue down quarter over quarter, but EPS up sharply quarter over quarter. What explains this kind of disparity?
Right, good question. A couple of key things happening. First, their operating income grew faster than revenue, up 20% year over year.
So better efficiency, margins.
Precisely. That improved efficiency led to operating margin expansion from 32% last year up to 34% this quarter, so the core operations got more profitable. But
There's a but.
there's a big but. The real driver behind that enormous EPS beat, the thing that explains most of that 40% surprise, is in a different line item. Other income and expense, or OI&E.
Okay, what happened there?
Well, OI&E surged in Q1 2025. It hit $11.2 billion.
$11.2 billion. What was it before?
Compare that to just $2.8 billion in Q1 of last year.
Wow, okay. What caused such a huge jump?
It was primarily driven by an $8.0 billion unrealized gain on a non-marketable equity security.
Meaning?
Basically, a paper gain from an investment they made in a private company whose value went up significantly on paper during the quarter. These aren't related to their core operations like search or cloud, and they can be pretty lumpy and unpredictable.
Okay, so that's critical context.
Yeah.
Strong operations, yes. But a very large chunk of that headline-grabbing EPS beat came from this one-time, non-operational financial gain.
Exactly right. Net income was up 46% year over year to $34.5 billion, but it was heavily influenced by that gain. So yeah, robust operational performance, definitely. But you really need to be aware that a large slice of that eye-popping EPS number wasn't directly from selling more ads or cloud services this quarter.
Got it. That makes a lot more sense. All right, that gives us a clear view of the results. Let's move on then to Chapter 3. Drivers and management highlights. We know the numbers look good largely, but what did Alphabet's leadership actually say was behind it? What were their key messages?
Well, CEO Sundar Pichai, he definitely sounded positive, highlighted the strong Q1 results, talked about healthy growth and momentum.
But I bet AI came up a lot.
Oh, constantly. He kept coming back to Alphabet's unique full-stack approach to AI, really stressing how central it is to, well, pretty much everything they're doing now and planning to do. He even called out Gemini 2.5 specifically as their most intelligent AI model.
So AI is the big theme. What specific areas did they point to as, like, the main engines of growth this quarter?
Okay, so for search, they reported continued strong growth, double-digit revenue growth there.
Impressive for such mature business.
It is, and they credited a good chunk of that to AI voting. Overview's getting more usage mention, over 1.5 billion monthly users engaging with it.
1.5 billion.
Yeah, and they said the initial reaction to their AI mode was positive, calling it the largest expansion to date for AI overviews. So that user adoption number suggests AI is really starting to make an impact in search results and usage.
That's a huge user base getting exposed to AI directly in search. Okay, what about Google Cloud? Sounds like that's really hitting its stride.
Absolutely. The narrative there was all about rapid growth and significant demand, especially for GCP, the Google Cloud platform itself.
Right.
They highlighted strength across their core products, their specific AI infrastructure offerings, and also their generative AI solutions. Seems like they're firing on multiple cylinders in the cloud space now.
And beyond the big two, search and cloud, anything else get called out?
Yep, subscriptions. Still a significant growth area. They mentioned crossing 270 million paid subscriptions globally.
Mostly YouTube and Google One.
Primarily those two, yeah.
Yeah.
And speaking of YouTube, besides the subscriptions, they also pointed to strong advertising revenue growth there too. So YouTube's contributing strongly on both fronts.
Okay, so it sounds like there's this theme of balancing massive future investment, mainly that AI infrastructure spend.
The $75 billion.
While also trying to run the current businesses efficiently.
Exactly. The earnings call really emphasized that balancing act. Big investments, yes, but also a clear focus on efficiency. They even talked about using AI internally, this AI-first Google idea to help manage workloads, boost productivity, kind of using their own tools to help pay for the future tools.
Makes sense. Which, yeah, brings us back to that huge $75 billion CapEx plan. They did explicitly say depreciation would accelerate because of that, right? We should expect that.
Yes, absolutely. That was a key caution. That level of investment is aimed at long-term AI growth, but it will hit the expense line harder in the nearer term through higher depreciation charges.
Okay. And any updates on the other bets? Waymo.
Just briefly, they did highlight Waymo, mentioning it's now doing over 250,000 weekly paid passenger trips.
Which is a big jump from before.
Five-fold increase year over year, they said. And the fact the CEO took a question on Waymo pretty early in the call, that kind of signals it's maybe becoming a more tangible part of their story now, not just a far-off experiment.
Interesting. Okay, so heavy AI investment, core areas firing, cloud profitable, Waymo making progress. Let's move to Chapter 4, Outlook and Key Metrics. What do they tell us about the future, either explicitly or through the numbers?
Well, interestingly, or perhaps typically for them, Alphabet didn't give specific number guidance for Q2 or the full year 2025 revenue or EPS.
Right, they usually don't.
But the big piece of quantitative guidance they did offer was that huge $75 billion number for capital expenditures for the full year.
Yeah, can't miss that one.
It really hammers home their commitment to building out AI capacity data centers, servers, their custom TPUs, all that stuff. And, that number probably met, maybe even exceeded what some analysts were penciling in.
So no specific forecast, but a massive spending signal. What was the general tone, the qualitative outlook?
Pretty confident, I'd say. Strong confidence in future AI-driven opportunities, confidence in the continued strength of the core businesses. The phrase used was an intention to accelerate progress through these investments.
They mentioned upcoming events.
Yeah, they pointed to Google I/O, Brandcast, Google Marketing Live as places where we'll likely see more details on their plans and innovations.
So that $75 billion CapEx, it's a big bet on long-term AI returns, even knowing it'll probably squeeze near-term free cash flow a bit, and will definitely mean higher depreciation costs down the road.
Precisely. Now, let's look at some of those specific key performance indicators, the KPIs they shared for Q1.
Okay.
Total Google advertising revenue grew 8.5% year over year, landing at $66.89 billion.
And within that,
If you break it down, search and YouTube were both strong, up 10% each. But Google network revenue, that was actually down 2%.
that network piece continues to lag a bit, doesn't it? Something to keep an eye on.
It does seem like an ongoing soft spot, yeah. But on the brighter side, Google Cloud revenue growth, still very strong, up 28% year over year, hitting $12.26 billion.
And subscriptions.
Crossed that 270 million paid subscriber mark globally. And that AI overviews metric, over 1.5 billion monthly active users, seems like one they're definitely tracking closely.
Right. What about the costs involved in getting users? TAC.
Traffic acquisition costs, yeah. TAC was up 6.2% year over year to $13.75 billion. But interestingly, TAC as a percentage of their Google advertising revenue actually dipped slightly.
Oh.
Yeah, it went from 21.0% in Q1 last year down to 20.6% this quarter. So that suggests maybe they're getting a bit more efficient at acquiring that traffic.
Okay, that's a positive sign on efficiency. And headcount? Still growing.
Yep. Ended the quarter with 185,719 employees. That's up both year over year and from Q4, indicating they're still hiring, likely in those key strategic areas like AI and cloud.
All right, we've now covered the executive snapshot, results versus expectations, the drivers and management highlights, and the outlook and key metrics. I think it's time to pull it all together in Chapter 5. Bottom line takeaways.
Okay, let's synthesize. So, takeaway number 1. Alphabet delivered an exceptionally strong financial beat in Q1, no doubt about it, driven largely by continued strength in core search and ad.
Right, the foundation is solid.
2. Their massive AI investments really seem to be starting to pay off. You can see it particularly in search engagement metrics and the acceleration in cloud.
And 3, definitely got to highlight Google Cloud hitting significant profitability. That 17.8% operating margin, that's a huge milestone.
Absolutely huge. 4th takeaway, it's pretty striking how they're balancing that enormous $75 billion CapEx plan for AI.
With boosting the dividend and authorizing another massive $70 billion in share buybacks.
Exactly. That combination really screams confidence from management about their future cash generation ability.
But point 5, they will need to manage that investment carefully, right? Keep driving efficiency elsewhere because those depreciation costs are going to climb.
Definitely a balancing act required there. And 6th, let's not forget the regulatory environment. Those risks are persistent and significant, always a factor for Alphabet.
Yeah, can't ignore those. And finally, maybe the most crucial takeaway for interpreting the quarter.
got to be it that the reported EPS, while impressive on the surface, was significantly inflated by that one-time $8 billion non-operational gain.
Right. Underlying operational strength was there for sure, but you have to mentally adjust that headline EPS number.
You really do, to get a clearer picture of the sustainable core performance. Which kind of leads us to a final thought, maybe something for you, the listener, to chew on. Given these strong results, the profitable cloud, the huge AI spending, what do you think are the biggest long-term bets Alphabet is really making here? And looking ahead, as this AI race just gets more intense, what could be the most unexpected challenges or maybe even surprise opportunities on the horizon for them?
That's a great question to ponder. Thanks for taking this deep dive with us into Alphabet's Q1 2025 earnings. We covered quite a bit today.
We did.
From the big financial beats and that OI&E gain to the AI focus, the cloud milestone, the huge investments alongside shareholder returns and those ongoing regulatory clouds. We walked through the executive snapshot, results versus expectations, the drivers and management highlights, outlook and key metrics, and finally, these bottom line takeaways. We hope thinking about that final question gives you a richer perspective than just the headlines.
Subscribe, Stock Analytics AI.
Subscribe, Stock Analytics AI. Join us next time for another deep dive into the data and stories shaping the business world.